Snapchat stock is down about 14% in after hours, and what they had to say about 2023 so far is not a positive thing, and it does not look good for the rest of the companies that report earnings this week. And you got your big dogs, you got Amazon, you got Apple, you got Google on Thursday, and to a lesser extent, you have Facebook reporting earnings tomorrow in after hours. So what does this mean heading into those major earnings? You definitely want to hear this video out. Now, also at the same time, you're at a major make it or break it level in the S&P 500, in Tesla stock, and Square stock, and a lot of the stocks that we invest in. Guys, is this going to mean a new crash for 2023? Is the bull market coming to a sharp end, or are things only getting started? Well, we're going to get into it here in this video. Guys, if this is your first time to the channel, hit that like button and subscribe to the channel. And this is the only channel where you have a 2.5-year-old little girl disrupting each and every single video. No, seriously, thank you guys for the patience. Let's get into it. So Snapchat down about 14% in after hours. Now, Snapchat, not an important company to the S&P 500, so don't make it seem like that's what I'm saying. I'm saying Snapchat, their whole business model is based off of daily active users. It's based off of advertising. So if advertising's not doing good, then Facebook's not going to do good. Google is also not going to do good, and to a lesser extent Amazon and Apple as well. So if you're seeing these problems with Snapchat, you're probably seeing it with bigger companies that will affect the markets. And most importantly, what Snapchat had to say was not good. So it says in a letter to investors, Snap called it a challenging year that was marked by macroeconomic headwinds, platform policy changes, and increased competition. They also said in quotes, on the monetization side, we anticipate that the operating environment will remain challenging as we expect the headwinds we have faced over the past year to persist throughout Q1, the company said in a letter. Now, it's not a good sign for economic activity to see advertisers slowing down, because why would you slow down if your sales were okay, right? If you could advertise, call it $1 billion and make 2 billion or make 3 billion or 4 or 5 billion, why would you not advertise? Now, if you're advertising $1 billion and making like 1.2 billion, what's the point? That's when people start to slash advertising budgets. It very much so can give you a glimpse into how the rest of the economy is doing. And from what we got from Snapchat, it's not doing so hot. And that leads me to have concerns about earnings on Thursday, because on Thursday, all at the same time, like granted, we don't get like one company here, one company there, one company over here. No, you got Amazon, Google, and Apple that report earnings all at the same time. So I don't think it sets us up good on a risk to reward profile, considering the S&P 500 is over that $400 level, and you are at a major resistance level. And I took the liberty of already putting this on the chart for you guys. It's this line right here, and I'll go ahead and scroll this over so you guys can see it and not have my big fat head in the way. You hit this level, got rejected September 12th. You got rejected here November 15th. You broke out above this and then got rejected at it. Or actually, you didn't even break out above it. This was the 200-day moving average. You got rejected here again on December 1st. You got rejected here December 13th. You just got rejected at this line on January 27th. And you didn't quite get to that level today, but it looks like we're going to get rejected from that again. That's not a good sign, especially if earnings are not going to come in good. Now, this whole picture revolves around earnings. If Apple and Amazon and Google somehow pull a rabbit out of the hat and give us good earnings, well, disregard everything that is said in this video, as long as Fed Jerome Powell doesn't crash the markets tomorrow. Now, let me give you guys the rundown for tomorrow. As far as current market expectations, you have a 99.4% chance of getting a 25 basis point rate hike. So believe it or not, if the Fed gives us a 50 basis point rate hike or pauses rates, that's going to be negative. You want to see a 25 basis point rate hike tomorrow. And then the question is, does the Fed indicate a pause coming after that? Or does the Fed expect to raise rates again 25 basis points or 50 basis points, right? They're probably going to say they're data dependent. We already know this. But I think a bigger risk to the markets right now is actually the Fed cutting rates or pausing rates, because historically the markets have never crashed in recent history when the Fed was raising rates. 2022 is really an anomaly. Usually the markets are going to the moon when the Fed's raising rates. You can see that perfectly in 1998 through 2000 until you got the recession and the tech bubble. The Fed was raising rates from 4.68% to 6.5%, and the markets did just fine. Same thing back here in 2004. The rates went from 1% to 5.25%. November 2006. And then what happened? They started to pause, and then they started to cut rates, and you got the great financial crisis. Same thing, even to a lesser extent, in 2016. They started raising rates again. 2019, they cut rates for the first time. And then you had the mini COVID recession, right? And then the Fed cut rates to zero. So historically, if the Fed pauses rates, they end up cutting rates about 90 days later. And the market's perspective on this is, why would the Fed be cutting rates if they want inflation at 2% and inflation is 6%? Why are they cutting rates? If they have to cut rates, then that is telling you, or at least that would tell the markets, that a lot of pain is to come. Or even pausing rates. Even just a simple pause in rates would probably not be a great thing. Believe it or not, this is totally contrary to what you'll hear on financial media, right? If the Fed pauses, why are they pausing when they want inflation at 2% and it's 6%? Isn't the economy strong enough to handle these rate hikes? If they pause or they cut or signal a pause or a cut, it's not going to be a good thing. It's not going to be seen as a strong economy at this current moment. And that's the only thing that matters. The Fed doesn't matter. Nothing else matters. It is the economy, growth, and a recession. Are we going to that deep, dark place, or are we going to be okay? Are earnings going to hold up? That's the only thing that markets care about in 2023. It's not how high is the Fed going to raise rates. Ultimately, if the Fed raises rates, that only pushes you closer to a recession, the ultimate thing the markets don't like. So hopefully you guys can see how the Fed really doesn't matter in this. It's all about the economic activity, and that's the way that you should think about the Fed. It's not the how much they're raising rates. It's, why are they doing this? What is it telling you about the economy? Hopefully that makes some sense. If it does not, I can elaborate this more in depth in another video, and I would love to do that for you guys, because there is a very wrong narrative about a Fed pause or a Fed cut in this current market environment. Everyone thinks that would be bullish. In reality, that's historically when the markets have crashed, as you can see, as we have on screen. And hopefully you guys can see that. Hopefully my head wasn't in the way. The markets rip during Fed rate hike cycles. The markets crash when the Fed starts to cut rates. Because why are they cutting rates? Because you're likely already in a recession, or at the very least, the Fed sees us heading into a recession. I apologize for rambling, and I really did ramble there, but you gotta know that. That's important to cement in your mind. Now, as far as economic data, you're gonna be getting that as well coming tomorrow. So at 2 p.m., you're going to get the Fed report. You're going to get the 25 basis point rate hike. You're going to get a readout of why they're doing 25 basis points. And then people really look for different changes from report to report. So you're going to get that move, that up or down violent move based off of that report. And then at 2:30 p.m., you're going to get Fed Jerome Powell. So if the markets go up a lot or down a lot after 2, it doesn't matter until you hear what Fed Jerome Powell says. That is the thing that ultimately drives the markets up or down after these FOMC meetings. Now, before that, at 10 o'clock in the morning, you will get the ISM manufacturing PMI for January and the JOLTS job openings for December. You're expecting 9.5 million job openings for December, whereas in November, you had 10.5 million job openings. And I do think that very strongly that bad economic data will be bad news in 2023 for the markets. Good economic data will be good news for the markets. But I think the JOLTS job openings are one of those things that the markets would like to see come down, because it's so unhealthy right now to have 1.8 job openings per every one employed person. That's not even close to normal or historically normal. So to see this come in at 8.5 or 7 million job openings, I don't think would be a hugely negative thing for the markets, but you still might get a negative reaction based off of that, because why are so many people going from looking for workers to, yeah, we don't need those workers anymore, things are slowing down, right? Again, back to that concept of the only thing that matters in 2023 is economic activity, and do we or do we not go into a recession? So we covered a lot here in this video, and I hope you guys learned something. At the very least, you learned my perspective, and it's all backed up by history and by data. So hope you did learn something. If you did, hit that subscribe button if you want to stay up to date with all of this information, and just hit that like button as well if you certainly made it to the end of this video. Khaleesi, tell him hit the like button. Tell him hit the like button. Yeah, she just said it. You probably couldn't hear that, but she said hit the like button. So that is it, guys. Enjoy the rest of your day, and I will see you in the next one.